Welcome. Welcome, everyone. This is just going to be, I believe this is my first, I would say, Bitcoin price action type of live stream. I mean, this is my second live stream ever, but normally I like to look at Bitcoin over the weekend, see if I could find some good entry points since the rest of the market is closed. Always still good price action over the weekend as well. We are at record highs. Today's November 23rd. I've never would have thought we would get up to 98,000 anytime soon. I did not think we were going to get there that fast. So I definitely understand everyone that was asleep during this massive bull run, considering it happened so quickly. I definitely know a lot of people are just like overly upset that they missed the bull run again. And I definitely could have invested more personally, knowing that my experience in the markets and just knowing price action and knowing economic events and all of these things play a big role in where Bitcoin is going. So I could have always done more. So it's a little frustrating on my end as well. So I definitely know the feeling. Definitely know the feeling. The only difference between me as a trader and everyone else that just deposits money on, their crypto apps is just that if you missed the bull market, you missed it. There's no really getting in at this point if you're not going to actively manage your account like in a trading aspect. If you're just a long-term investor, it is pretty late. I can say it's never too late because we haven't reached 100K, and who knows the market cap of Bitcoin in the future. It may even go higher and higher and higher, who knows, until all the Bitcoin is bought up. So there's really no limit to the price of the coin. This is not financial advice. I'm not a financial advisor. Disclaimer. For any investment ideas or investment advice, please seek out a financial professional. Read the disclaimer in the description as well. This is all for entertainment purposes only. But this is why it's important for you to learn price action, learn how the market moves, learn how to trade, learn how to get in and out, because to a trader, none of us miss the bull market. It doesn't matter if we're already at 98K. If you know how to day trade, you know how to intraday trade, or you know how to swing trade, you know how to trade in general, you never in a position where you have to say, I missed the bull market, I missed a rally. Because in the bull market, there's people exiting the market all the time. So you have multiple opportunities to short the market or continue to trade pro trend. This is just another reason why I think this skill is the most valuable skill out there, and it beats inflation, and just a valuable skill. No matter what situation you're in financially, it is the hardest way to make easy money. And I learned that quote from somebody. I can't remember exactly where, but it is the hardest way to make easy money. It takes a lot of discipline. It takes a lot of self-reflection. It takes a lot of growth to be able to manage your capital, especially when you're not using algorithm and you're doing all this manually. You're marking your charts out manually, um, and you're just doing everything like in the old days. There's nothing wrong with it, but when you make that slightest mistake in your markups and it costs you the trade, or it costs you a couple $100, or it costs you your live account, that's where that frustration starts to build up, and that's where the spiral starts. But I just think it's very important that this skill is something you learn. It's not the only thing you need to learn. It's not the only thing you have to learn, but it should be one of the top 5 things everyone should know. It's just how the economy, it demonstrates the health of the economy, demonstrates the health of specific companies, um, and generally how the nation is doing financially. Yes, there are artificial injections of funds, but it it really tells you what's real and what's not. Instead of you having to depend on the local news, finance sector to tell you, oh, the economy's doing good, the economy's doing bad, and just believing it and making your financial decisions based off what your local news station is telling you every morning while you drink your coffee, you can go on the charts and look yourself. Because at the end of the day, when the news tells you to get in, to get out, or a good opportunity, the opportunity's already gone probably a few weeks prior. And they're just trying to get liquidity into the market so the people who got in at the right time can exit with your liquidity, with your money that you're just putting in now because your local news station told you to buy this or buy that investment. So when you hear about it in the mainstream, it's already too late. And this is why you need to be able to read price action, read the market yourself. Because at the end of the day, the people you invest your 401ks with, your retirement fund with, your pension with, your Roth IRAs, the people you invest, they have people in the back room looking at the charts, looking at investment opportunities so they can grow your portfolio. This is basically what they're doing. And they're making massive profits on your money, and they're just dishing you out the pennies and as your rate of return at the end of the year. They could be making 120% off your money and only giving you that 3%, 4% ROI that they advertise. So at the end of the day, this skill is what they're doing. I wouldn't say the specific trading strategy is what they're doing, but the knowledge of reading price action, projecting where price may go, finding opportunities, finding good investments to grow their customers' portfolios, this is what they're doing. And this is the skill that everyone should have. And that's including Bitcoin, including the NASDAQ, the S&P, the US 30, everything that your specific money is being invested in, ETFs, all of these things, index funds. All of these things are things you can look up and read and understand that the price action behind it through the charts. So that being said, that's just something that continues to remind me that this is an important skill and why I strive to continue to get better, continue to learn every day. Eventually feeding people in need, growing, and just being more financially responsible. When you start to see your balance jump up and down based off of a click of a button, it really puts things in perspective on how careful you need to be, how vigilant you need to be, how emotional aware you need to be, and all of these things. It's the fastest way to grow as a person. When you know the consequences of every single decision you make can be either rewarding or financially devastating. There's really not much room for error before you finally are fed up with making the same mistakes over and over again and you're willing to change. And that's what trading has taught me throughout my entire trading journey, and why I've been able to grow as much as I've been able to. So in the screenshot on my thumbnail, you guys see that I took a short position here. And the reason why I took that was, one second, simply because it's all about liquidity. For me, it's just about liquidity. This is how I'm able to find positions in the market. I ended up putting this indicator back on, the trading session indicator. I don't really use it, as you guys have seen in the past few weeks that I've been uploading on YouTube. I don't use this session indicator. It is useful, and I may start to, but I thought for the sake of visualizing liquidity that I put it back on. But as you can see here, I saw swing structure get swept. Asia, the liquidity above Asia was swept. Here. One second. Let's just make this a little bigger. I know that's super horrible. Let's just say, okay, so I have it saved here. Buy side Asia liquidity. I saw that got swept, so we came down, swept liquidity, came back up, and I definitely want to explain why we have these markers here. So that marker was a market structure shift fair value gap. As you can see here, we'll zoom in. We have the market structure shift here. Price came in, triggered a fair value gap rejection. We ended up going deeper, but as you know, if you put your stop loss below that candle or below breakaway gap or below the low, I mean, the further at this point, if you're just targeting Asia highs or you're just scalping, you wouldn't put your stop loss that far down. But targeting the Asia high, this technically would have been valid. Not all trades you get are going to be super high RR. This is where your risk management comes into play. So that would have been a nice one-to-one. Or in this case, as you guys know how I trade, based on the videos. If you haven't watched my videos before, go watch them. I do like 1 to 3, and at 1 to 1, I will move to break even. So if I didn't scalp this, I would have been at a 1 to 1 with a eventual break even. Now, this next entry point here, and I don't really trade this late. This is around 12 a.m. 1 in the morning. I don't trade this during these hours. The second entry was another rejection here. That one ended up failing, but as soon as we get to Asia highs or session highs and very significant areas of interest or P arrays, I tend not to want to shoot past them unless I get a lot of confirmation that we're going to break that area, but a lot of the time I just look for rejections. Market structure shift here. So as we enter into this area here, sweep of liquidity, it would have been best to wait for a price to liquidate this buy side liquidity, activating buy stops for people who want to trade a breakout. Excuse me. Then waiting for price to break, price to return back into this area here, and then try to play a short. That would have been the best move. This is on the 5 minute, so you guys can only imagine the opportunities available on the 1 minute. So I don't really use order blocks as well, so it's not something I'd really have used as a trading idea. But as you continue to see, we did have this area here that it wanted to reject off of. This area here was the rejection. But at the end of the day, you can see that we were just building up liquidity. All of this was just liquidity being built up. Came back, swept liquidity again, a major push down, pull back into New York, market structure shift, fair value gap entry, and then I shorted. Let's see. I would have to pull up the that was this entry here. As you can see, market structure shift, fair value gap, took the entry 1 to 3, shorted that, exited there. And that's how we got into that position. But the reason why we did that was because we saw all this buy side liquidity getting swept. Then we waited for price action. We had a market structure shift get created at, what was it, 940, pull back into fair value gap, and then we went for that short. So this is why I put the indicator back on. It's looking like my trading view needs to refresh. In the middle of a live stream. It's okay. It happens sometimes. And we're back. Let everything reload. There we go. Like I was saying, another example. I don't normally trade Bitcoin during the week, but as you can see here again, there are Bitcoin futures, so that's pretty interesting as well. So as we see here, Asia high got swept. The buy side liquidity there. And this is something you guys should be able to back test. Buy side liquidity, fair value gap. If you're on a lower time frame, you would have saw a market structure shift already on this lower time frame. Somewhere around here, but this looks significant. We'll see when we drop down on the lower time frame what that actually was. If it was a market structure shift or a break of structure. Right there. And then we have our fair value gap entry, giving you that right there. Now, this entry point here that it gives you is not because it detected a market structure shift. So you yourself have to see the market structure shift to validate a entry point here. That's what you have to do. I would not be taking something like this, like a long here, based off just because it gives it to you. Like here, this is a market structure shift with a bullish fair value gap entry. That seems more reasonable and valid, and that's where your discretion has to come in. And it's targeting your previous day high. This is a reasonable entry, a reasonable setup of why you would want to take that entry there. You still have to know a bit about price action. You still have to do your studies on ICT 2022 model. So no indicator out there is 100% perfect. No indicator out there will make you rich overnight. It's just a tool for you to be able to save you time on your markups, save time on the seconds you need to focus more on executing your trades and not really worrying about whether or not you marked up your charts properly. This is the reason why I utilize this indicator, or the reason why I utilize any indicator for that point. So we got the buy side liquidity get swept, market structure shift or break a structure, pull back into the area. So let's jump down to, let's see if it's the 3 minute that'll show us anything. Yeah, so as you can see here, now this fair value gap was from the 5 minute, but as you can see here, it ended up being a market structure shift here. Market structure shift, pull back only after buy side liquidity was taken here, and that would have been a reasonable entry to trade. You know, there's specific targets. You could have targeted that most recent low, which would have been here. I'm not sure why. If based on your risk management, you can determine whether or not how tight your stop loss goes. But in the 2022 model, it tells you to put your stop loss at specific areas, based on the understanding of whether or not price behavior should not get back to that area. Another area, if you look on the left, that would be potential first target, potential second, potential third, and then completely targeting Asia low. And now this all depends whether or not you trail your stops as well. Some don't. If you would have trailed your stop, you probably would have gotten down here. If you only moved to break even, you would have gotten stopped out at break even. And if you didn't at all, if you didn't touch your trade at all, you would have been able to hit full TP. And that's a 4.5 RR. And at the end of the day, if you're in a trade and you're willing to hold, you got relative equal lows here also at this Asia low. So that's pretty interesting. Also got some imbalance here. So many reasons why you would target that. But based on your risk management would have been determined on why you hold, what you're holding for, where your targets are at, stuff like that. So that's another example. If you're trading Asia, so we go into London. As we go into New York, we just get a complete reversal. Again, you would definitely need to see the reason why price rejected, or where it potentially could have rejected off of. Nothing I see here but an order block. I wouldn't necessarily extend my order blocks, and this is just my personal trading style. I don't extend order blocks, or even consider them valid for me personally. That's just not my trading style, but it can be utilized for people who do have order blocks or use them. But as you can see, that breaker structure created that order block last candle, and that was the reversal point, and reversed at 6:57 or 7 o'clock. Wait, I'm sorry, 8:57. Yeah, that is 8:57 there. And we have 9:30 open. Right there. I don't know if you guys can see that. That's 9:30 open. So before 9:30 open, we get that sweep, we get that drop into an order block, getting rejection. This whole entire move we wouldn't consider until we get that close above, creating a market structure shift. And this whole candle here being that fair value gap. And then after that point, you would consider as well, we have a breaker. A breaker because we have a low breaker structure, a low being break, and then a high, making that a breaker. And then you could have target London highs, which would have been there. Target that high there. Like I said, candles of stop loss all depends on your risk reward management, or risk management, including following the textbook. Trade below or stop loss below the previously closed candle or whatnot. So that was Friday. Thursday, Thursday again, Asia was, I didn't, like I said, this is all, I'm just watching price action for the first time with you guys right now. I do not look at the chart, at crypto charts during the week, but so this is all new to me. Asia just ran. Pretty interesting. We go into London. Instantly, as you can see, if you guys are London traders, it looks like the sell side liquidity got raided here, but some traders specifically want to see a close, which we do not get a close here. Yeah, we do not get a close. So that's just more liquidity to be taken. What is it here? Asia buy side liquidity. So we ended up seeing that Asia buy side liquidity, waiting for that market structure shift. Getting a what it looks like a breakaway gap. Then another fair value gap down here, which gives you that entry point. As you can see, price came directly into that area here, almost to the 50%, a little past the 50% actually. I'm not even correct on this. There you go. Just a little more accurate. Little past 50%. And you could have shorted targeting these relative equal lows. Sell side liquidity, targeting this imbalance there. And this would have been all pre-market. Pre-market here. Until 9:30, which would have been here. That would have been your pre-market. Would have taken no trades until you saw, in all honesty, I would have waited for a continuation down. So I wouldn't have taken this short, and that sounds like a hindsight decision, but yeah, it's just I always assume manipulation, to be honest. I just assume manipulation in 9:30, so I would have waited just a little bit. But the rules are you should be waiting for your setup. It doesn't even matter just because you see price give you an entry point does not mean you should take it. You should see your setup. In this case, it was higher time frame fair value gap, and if you actually waited for your setup, you saw the market structure shift here, fair value gap there, as well as a breaker here, because we got that break to the downside, market structure shift to the outside. So that would have been a breaker there, and then you got just two entries to go long. Targeting London high, yeah, just targeting London high or 1 to 3 RR. Your target should always be depending on your risk management as well. Yeah, this price action, clearly you can see some opportunities, but it would have been one of the days traders call choppy. $9.30 market structure shift. So in this case, you would have to go down to a 1 minute. There's always an entry. Don't ever let somebody tell you that a day is choppy. No good entries, because that's just not true. It's really not true. There's always an opportunity. In this case, we took previous day high. Previous day high took and if you waited for 9:30 entry, well, this is choppiness. When you get market structure shift to market structure shift to breaker structure to market structure shift, this is consolidation, and you need to wait for manipulation and distribution. That's the only way you can navigate a mess like this. That comes with patience, but we didn't really get any entries until 10 a.m. We got 10 a.m. We got market structure shift, and then we get our breaker structure market structure shift, which is also a breaker. Breaker there, market structure, fair value gap there, and then entry. All of this was consolidation. Basically, all of this consolidation. All of this manipulation. We can call it whatever, it doesn't matter. Manipulation. And then we got our entry for distribution, which would have been distribution. If you had the time to really go through and watch price action and your patience, you would have been patient enough to wait for this to play out. If not, if you don't have the time to watch charts all day, I would understand why you would probably be chopped up in this. It's understandable. It's not justified. I can't justify that impatience. I can't subscribe to validating your impatience or my impatience, because we shouldn't be trading like that at all. But it's understandable why something like this could have been missed. You only get a couple of minutes to really, if you're marking your chart out manually, you only have a couple of seconds before your entry is presented. 3 minutes for you to have already understood accumulation, manipulation, breaker structure upside, market structure shift to downside, breaker, fair value gap, all that. You have 3 minutes to realize that price is coming into your breaker slash fair value gap, and that this is your entry to go short, targeting the other side of that consolidation after it's sweeping buy side here. You have 3 minutes to execute your trade. Your setup presented itself as soon as the break structure started. So that was at 10:04. Entry ended at 10:12. So 4, 5, 6, 7, 8, 9, 10, 11, 12. You had 8 minutes to get all of this correct and execute that trade. Could you have done it? Probably. Some people train their minds and been trading for years to be able to do that at that record speed. It's possible. You see people on YouTube do it if they're really not lying about it. But I'm not a professional. I've been trading for a while, but I'm not a professional. I do not have the ability at this moment in time to do all of this manually. Mark my charts out manually, come to the trading decision execution all within a couple of minutes. I am getting there as I learn and train every day. So I have no pride or no shame in using an indicator, especially after I spent the time of creating the one that I did in order to cut execution time to seconds. But that was just a classic accumulation, manipulation, distribution setup there. And that was Wednesday. We'll go over Tuesday. Let it load up. There you go. So don't really see anything interesting in Asia. Not really. But you can, right off the bat, market structure shift, market structure shift. You see a higher time frame market structure shift. Pull back. So yeah, I'm not really seeing a clean setup here. I can't even convince myself that this fair value gap here would have been reasonable or a reason for me to enter. I wouldn't have saw that at all. Not that I wouldn't have saw it because it would have been printed. I would have seen it, but I wouldn't have considered that a reasonable reason to enter. In all honesty, the Asian range sweep setup is actually, once Asia gets taken, I'm looking for a market structure shift, fair value gap entry to target sell side of Asia. So this would have been chasing price, because at the end of the day, what I really would have been waiting for is market structure shift, fair value gap here, stops above the high, target the low here, or at least get your 1 to 3. One, two, three. Probably wouldn't have made it 1 to 3, 1 to 2, it's whatever. All depending on your risk management. If if you would have trailed, if you have a trailing, you could target that as well, those relative equal lows. But that's how I would trade Asia. Asia sweep, liquidity sweep. But as you can see, this is all bullish market structure, bullish price action, starting from all the way down here, having your upwards price action. So even seeing that there, but we continue up there, market structure shift coming down. And if we are in bullish market structure, this is just sell side liquidity being taken, nothing significant. On the higher time frame, this is just a sell side liquidity grab. Market structure shift here, back into alignment. This would have told you we are back in alignment with higher time frame order flow, price action. So continue up here. Market structure shift to the downside, telling us we're in pullback phase. Market structure shift telling us we're back in alignment. Continue up. So if you're trading pro trend and you're just asking yourself and you're just waiting for that market structure shift back in alignment to get you those entry points, fair value gap, market structure shift, fair value gap in alignment with higher time frame order flow. This happened like around 6 a.m. And as we come into New York, price gets a little more volatile. Market structure shift. So as the volatility comes in, it liquidates this sell side, that sell side in London. So I would just keep it, if we're not shooting all the way past, if we're not super close to London low or previous day low, I would just ask yourself, what is the most amount of sell side liquidity it would need if we do continue to push up, or how much buy side liquidity would it need before it continues to move down. So you'd want to ask yourself, what is higher time frame order flow, price action, and if we are to liquidate more sellers, how much of those sellers below these lows would we need to take out before we continue in our higher time frame direction. So all we needed was London liquidity, so sellers here, and all the sellers below this relative equal lows, actually like almost a triple bottom. Because you gotta understand, it's not just the low itself. We have people with stop losses. The people's stop losses are not super tight. They actually have stop losses like this. You know, traders don't trade, institutional traders don't trade like this, but just to say the millions of retail traders, they have their stop losses between here and here. So all of this area here is liquidity. All those areas of liquidity, including here and here. So just because you see a little wick, price wicked it a little bit here, does not mean that all the sellers or all the buyers that were here with stops got liquidated. That would just be assuming that everyone's stop loss was that tight, and that's just not true. So price did come back, sweep a little more deeper, activating sell stops for people who wanted to short here, and also all the buy stops are, yeah, for the sell stops for the people who wanted to trade a breakout to the downside, and um, giving them the liquidity that they need to push price higher. So that's kind of the understanding of why price needs that pool of orders on the opposite end in order to fuel their price action back to the upside. And then at that point, you're just waiting for your entry, your setup, your model, your so you saw that sell side liquidity was taken here, and all of this. You're waiting for your market structure shift based on how many confluences you need. It's that if you guys use fibs, it would be market structure shift, fib retracement from the high to the low, 50%, 62 and 79, fair value gap entry, targeting, let's just say you did 62, targeting either that high, that area, or that area. I don't use fibs anymore, but nevertheless, it is very useful. That was Tuesday. And last but not least, Monday. Monday was just, I have no idea. No idea what happened Monday. I don't know why this happened, but apparently it did not matter because people probably liquidated. Give me 1 second. So we're just gonna skip Monday. But that is my overview on crypto. I don't really do Ethereum. We can do Ethereum probably on another live stream. Altcoins maybe, but Bitcoin is pretty much the only one you really need to focus on. And yeah, like, subscribe. Thank you for all the support on the channel. I've reached 3 subscribers, so that's amazing. That's amazing. See you guys on the next one.